Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamowen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today we're starting with a rather sobering topic: 4 homes in southern Ontario that recently sold at massive losses. It's a reminder of the volatility in the real estate market, especially when buying during peak times.
It's quite heartbreaking to hear about these stories, Steve. For many, a home isn't just an investment. It's a dream and a place to build memories. Seeing such significant losses can be devastating for families.
Absolutely, Janine. Let's look at the numbers. The Toronto Regional Real Estate Board reported that the average selling price last month was down by 2.2% compared to the same month in 2024. People who bought at the peak in late 2021 to early 2022 are now selling at a loss.
One of the most striking cases is a home in North Oshawa that sold for a $510,000 loss. That's a significant amount of money, especially considering the short time frame.
Indeed. And it's not just a one-off case. A Mississauga home also sold at a $445,000 loss. Real estate commentator Shazi highlighted these and other brutal stories on social media, pointing out how some utility companies are even cutting off services, and lenders are stepping in to sell properties at a significant loss.
That's a tough situation for any homeowner. Let's talk specifics. A home in Guelph, for instance, originally sold for $2,350,000 in early 2022, but was listed multiple times before finally selling for $1,775,000, a $575,000 loss.
Yes, Janine. And that home had some great features: a chef's kitchen, an in-ground pool, and a large lot. It shows how even well-appointed homes aren't immune to market downturns.
Also, a Brampton home at 7 Odeon Street sold for $2,100,000 in April 2022, but was finally sold for $1,640,000. That's a $460,000 loss. It even had a separate suite with income potential.
Exactly. And in Oakville, a home on Arlington Drive mirrored this pattern with a $460,000 loss. It was on a quiet street and had features like an in-ground saltwater pool with a waterfall.
Finally, there's a home in Bowmanville that sold for a $365,000 loss. It was purchased in late 2021 for over $1 million and ended up selling for just $660,000. It's a stark reminder of how quickly things can change.
These examples are a cautionary tale for anyone looking to buy or sell property. It's crucial to understand market conditions and not just focus on the immediate numbers.
That's right, Steve. It's about finding the right balance between your financial goals and what feels right for your personal life. These stories remind us to approach real estate with both our heads and our hearts.
Let's switch gears and talk about the Canadian 10-year government bond yield, which recently dropped to 2.97%. This is close to a 2-year low of 2.83%, reached on March 3rd. Janine, it seems like this is a response to some significant uncertainties.
That's right, Steve. Investors are seeking safe havens due to several factors. Political uncertainty is a major one, especially with the election of Mark Carney as Prime Minister. His hardline stance on trade negotiations has certainly stirred the pot.
Yes, Carney's approach, particularly his commitment to maintaining tariffs on U.S. goods until what he describes as Americans show us respect, has introduced concerns about future trade policies. This could have a substantial impact on our economy, which is heavily reliant on exports.
And it is not just about politics. Renewed U.S. tariff threats are adding to the anxiety. There's talk of a potential 250% tariff on Canadian dairy and further measures on lumber. It's no wonder investors are nervous.
Exactly, Janine. The economic data is not doing much to ease these fears either. The latest jobs report showed only around 1,000 positions were added, which is far below the expectations of 20,000. This has deepened concerns about economic momentum.
It is definitely a challenging time. With these economic pressures, there is speculation that the Bank of Canada might cut rates by 25 basis points to support growth. This anticipation is likely contributing to the lower bond yields.
Lower bond yields can be a double-edged sword, though. On one hand, they reflect the market's anticipation of a rate cut, which could stimulate growth. On the other hand, they highlight the current economic distress.
Absolutely, Steve. It's a complex situation that requires careful navigation. For those involved in real estate and mortgages, understanding these dynamics is crucial. It is about balancing the numbers with the human impact.
In our final segment today, we're shifting our focus to the recent expansion of education options by the Real Estate Council of Ontario, or RECO. This is a significant development for aspiring real estate professionals across the province. Janine, it looks like RECO is really stepping up to offer more flexibility and choice to learners.
Absolutely, Steve. By approving 4 institutions, Algonquin College, Career College Group, Humber Polytechnic, and Fleming College, RECO is providing a wider array of options for students. This allows learners to choose the institution that best fits their needs while still maintaining the high education standards expected in the real estate sector.
That's right, Janine. Joseph Richer, the registrar at RECO, mentioned that this initiative aligns with their long-term vision of elevating real estate education in Ontario. It's a big step forward, ensuring that the education standards continue to meet the industry's requirements while giving students more control over their learning paths.
And let's not forget, Steve, that the curriculum has been updated to include experiential learning and mandatory simulation sessions. These are based on real-world transactions, which I think is a fantastic way to prepare learners for the practical demands of trading in real estate.
Indeed, Janine. The curriculum now includes recent legislative and regulatory changes to the Trust in Real Estate Services Act, 2002, or TRESA. This ensures that the education is not just current, but also comprehensive. Plus, with assessments being standardized across all education providers, the consistency and quality is maintained.
It is also worth mentioning that NIIT Canada, in collaboration with Humber Polytechnic, will stop accepting new learners in the spring. However, students who are already enrolled will be able to complete their courses through September. Transition plans are in place to ensure a smooth shift to the new system.
This expansion marks a significant change from the previous model, which had a single provider. By diversifying the educational landscape, RECO is not only improving access, but also fostering a more competitive and dynamic environment for real estate education in Ontario.
Exactly, Steve. It's an exciting time for anyone entering the real estate field. With these expanded options, new professionals will be better equipped to meet the challenges of the industry. This is about empowering learners with the tools they need to succeed.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.